Hi, Larry Gaines, Power Cycle Trading. And in this video, I'm going to show you a trend trade into earnings release setup. So we have earnings really kind of starting to kick off next week. And on Monday, we're going to have the 16th Netflix. So it tends to be a pretty big earnings play. But there are three different types of earning type trade setups. And so the first one is what we call a trend trade into earnings. So this is a trade that you're looking to put on and have that specific stock, such as in this example, Netflix, trend either up or down going into its earnings release. Second type trade is just doing an earnings trade the day of the earnings release. And then the third type trade opportunity is a post-earnings trade after the earnings release. So I'm going to show you one way to position and trade a trending trade into the earnings release. And so this will be on Netflix. So if you look back historically, Netflix tends to start trending in the direction either up or down going into its earnings release 7 to 10 days before the earnings. So you can see here earnings next week are on the 16th for Netflix. And then what you're looking for is a signal to actually go long Netflix. So the great way to do this is you could have just gone long Netflix here. We had a buy signal here. This was on the 5th. Or if you want to reduce your risk, another great way to do it is as a pairs trade. So in this trade example showing you this would be going long Netflix, but then to offset some of the risk in case the market rolled over, you sell QQQ against it. And so you do this as a pairs trade. So this setup was on October 5th. So we had a buy signal here on Netflix. So it was buying 100 shares of Netflix. So you do this per 100 shares, or you could do it with option contracts. So this would be buying 100 shares of Netflix here at $1.90 a share, or $190 per 100 shares, $190 per share, and then you do 100 shares, and then you'd be selling against that the 100 shares of QQQ, and it was at 146.70. So now what you're doing is you're trading a pairs trade or a spread trade. So you've got 5 ways to make money versus just if you buy Netflix, you only can make money if it goes up. So here's what it looks like as a spread. So here's Netflix, the July earnings. So its earnings were announced on the right here on the date of the 17th. And so about a week before, you can see we got a buy signal. This is a cycle reversal and a momentum. So there was a buy signal here at $12. So basically you're buying 100 shares of Netflix here at $12 per share, and then you're selling 100 shares of QQQ at that same price. So that spread there was at $12. So you're long 100 shares of Netflix, short 100 shares of QQQ, and then you do it accordingly, if you want to do 200, 300, whatever. So the spread then per 100 shares is then on at $12, and it went right before you want to take these types of trades off on or before the earnings release. So that was on the 17th. So you can see this spread went from $12 to basically $19, and so that's $7 per share, or $700 per 100 shares. And so here's the same example, current example, and this is, let me pull this back up here. This was currently the setup, and this was going long on the 5th, 100 shares of Netflix, and then 100 shares short of QQQ. So you have a pairs trade. And so that was done at $43.30 per share, or per 100. And you see it got up to a high of 50.36 on the 6th, and then came off, and here was your where to take it off. So you want to take it off, and basically on this particular exit using an hourly time frame. So you can see the entry was right here on the 5th of October, and then it came up, made that high, rolled back over. You can see it starting to shift on momentum, cycle 1 here shifting down, and then when it crossed right here, this 8 exponential moving average, that was a great exit point. So out at 40, basically 48.60. So in at 43.30, out at 48.60. That's $5.30 per share, or $530 per 100 shares. So the way to do this, with pairs, then you don't have to worry about overnight risk. So it's really been a good way to trade a pre-earnings trade into earnings for Netflix.